All right, hello everybody, and thank you for joining us today. My name is Jussi Chudin. I am past president of RGD and a founding principal and creative director of Forge Media and Design. I would like to welcome you to RGD's Q&A webinar on financial management. We have Leanne LaRose, partner at Kriens-LaRose LLP, joining us today to answer our questions on financial management. As one of the co-founders of Kriens-LaRose, Leanne brings a tremendous wealth of knowledge and experience, which she has used to a great extent to pursue her passion of assisting owner-managed businesses and individuals with their multifarious taxation, accounting, personal finance, and estate planning needs. If you have any questions for Leanne during this webinar, please submit them using the Questions tab in the webinar control panel on the right side. We also invite you to interact with us on Twitter by tweeting during and after the broadcast using the hashtag RGDWeb. All right, let's get started. Welcome everyone and thank you for joining. If you're ready, Leanne, we will start with the first question. Are you good to go?
Yes, thank you.
Excellent. All right, for our first question, one of the participants is wondering if you can provide clarity on who qualifies for the CERB. This person is a freelancer who has seen a big decrease in work, however, has not lost their income entirely. Does this disqualify this person from applying for the benefit?
So I'd like to start off by explaining a little bit about the CERB or the CERB and the purpose for that. A lot of people that have lost their jobs due to COVID, if they worked for an employer and they worked for someone that took employment insurance off, they would normally be able to collect employment insurance or unemployment insurance. The government realized there's a lot of people that are self-employed out there that have also lost their work, and self-employed or business owners or whatever, and realized that this is not a time to worry about whether you've paid into the employment insurance system or not. So I think what they needed to do was come up with some very quick legislations. So the CERB is to help people that could not otherwise have applied for EI, but it has expanded quite over the last few weeks as to, it takes the place, you can collect CERB first before you collect EI. So as a freelancer, you have not been paying into EI, not required to because you're self-employed. So you are, if your work has completely stopped and you are not working, you are entitled to apply for the CERB, which is $500 a week, $2,000 a month. If you are continuing to work somewhat in winding down your projects or finishing off some projects that were on the go, then you may not be eligible. I think you have to work less, like pretty much stop working. Like the purpose of the CERB is for people that actually cannot work because they've lost their work, they have family members that have COVID, or they've been forced to be in lockdown, or some reason why they cannot get any income from employment or from self-employment. So you may not qualify initially because you're still doing some projects, but if that project winds down and the income stops completely, then you would be eligible. It's not as if you're eligible today on this day, and not at all. I think you have to kind of keep evaluating it week by week, but you actually have to not have worked for 14 days in order to qualify for that period. So
And just, Leanne, just
sorry,
double checking.
my dog.
No problem. Just double checking quickly. You said week by week. It's not one of the official questions, but does this mean you don't have to do a full month or wait for a month end? You can do it basically any given week? the
When
application?
you apply, though, you're at, what they're saying is you're not anticipating working for the next 4 weeks, because when you apply,
Okay.
then you're applying for like a 4-week period. So basically, you have to have stopped working. That's what the purpose of the CERB is, for people that are basically unemployed and don't have any work. I'm pretty sure that that's where it reads. All applications must, they must not be receiving any income from employment. So people that have reduced hours but are still working do not qualify for the CRB.
Okay.
So again, reduced hours, like maybe I'm self-employed, so I know that my work is less right now and I'm not working as much, but I'm still working. So I would not qualify, even though I'm maybe not working full time, or some of my staff aren't. If we still have them working, then they cannot collect.
Okay. Now, we just got a note here in the questions tab. It's not a question, but it's a note about this. Apparently, just today it was announced that anyone making less than $1,000 a month right now will qualify for CERB. So that may help freelancers as well. So this apparently just came out. So
yeah,
this,
I wanted to watch the Prime Minister speak at 11:15 and I was too busy dealing with calls. So you're right, this is like a moving target, and they're coming up
a little different, yeah.
So thank you for that. So $1,000 a month if they're making less than
or less, yeah.
And if you divide that on a weekly basis, so that would be about 160 hours. I'm just trying to figure out, because they had something about 10 hours a week or less, right? So I'm wondering
something
if that,
like that, yeah.
works out to, if you're, but anyway, it makes sense. So if you're making under 1,000, there's just so many other caveats. Like, what if you continue to pay yourself dividends out of your corporation? Would you still qualify for that? Like, I don't think, because they're now saying employment income is also ineligible dividends for those people that actually were in corporations that were paying themselves dividends as opposed to paying themselves a salary. That business has totally stopped. Maybe there's some retained earnings in that company. Can I continue to pay myself dividends in addition to collecting the CERB? My answer would be, before this announcement, would be no, you can't, because dividends are considered employment income under this CERB criteria. Therefore, you cannot be receiving them in order to qualify for the CERB. So now your question, well, can I still pay myself $1,000 worth of dividends out of my corporation and still qualify for the CERB? By the sounds of it,
that might be the case, yeah.
That might be the case.
All right. Well, let's move on to the next question for now. We have a lot of questions already pre-submitted here. Next question is regarding layoffs and rehires. If someone laid off employees when their workload dropped before the 75% subsidy was announced, do they need to rehire them in order to claim the 75% subsidy, or can they just claim the 75% on the remaining employees?
Either or. They're not mandating that you bring back the laid off employees. The key thing is, it's the purpose of the wage subsidy was to, a lot of people just said, listen, I don't have any work. You're going to have to go on unemployment or go on CERB because we don't have any work for you. But you as the employer, you don't want to lose this person, because if they're valuable to you, you want to keep them employed even if you don't have any work for them. So the purpose of the wage subsidy, and they've even said you don't have to have them working full time. They can be, what's the word for long? So bring them back. Their salary will be subsidized, and now you're able to kind of keep an employee on your team and motivated, and so that's the reason they're offering this. The bottom line is you do not have to bring them back. You can use the subsidy for the employees that you have on your team going forward as well.
And if you bring somebody back, for instance, that you really don't have any work for, you pay them 75%, so you keep them on your payroll, etc. Do you have to top up the rest of the salary, or can you basically just give them the whatever you get from the government and that's all they're getting?
It is my understanding that the top up is not necessary. They're asking the employers to do the top up, but they're not mandating it.
Yeah.
And you know, the employer may not be able to top it up because you don't have any work for that person. So you're actually bringing them back so you can keep them. And they're actually going to get, if they were making more than $847 a week previously, and you can show that, or more than 75% of something that created 847, which was what, 1130 or something per pay, then you now are able to get them their 847 versus the 500 that they're going to get on the CERB. So it's an opportunity, and my understanding also is if you bring back the people and they're not working, so these are people that you're bringing back because you want to keep them for, you know, as time goes on, then you'll be entitled to the wage subsidy for those people. And if they are not working at all, you will also be entitled to get the employer portion of the CPP and EI funded as well, which means the employer, if you're bringing people back and giving them the wage subsidy, but they're not working at all, this is just your way of being good faith and being a great employer, then you'll be entitled to the employer portion as well. And so that's another way. I think the government's just saying, listen, we're here to help. So this is one way to get your people back, feeling important, feeling motivated, helping the system and working with it. Keeping in mind, you have to qualify for all the other various criteria as well to get this. And also remembering that it's currently only a 3-month program and it only goes till June the 6th. So you have to kind of look at all of the various moving parts.
Right. Now, somebody asked if someone had a higher salary, which you briefly talked about, can that salary be reduced on rehire?
Is this a new question?
Well, it's kind of an extension to this previous question that somebody wrote.
Mm-hmm. I think that is if you're bringing them back under the wage subsidy program and they are not working, then they are benefiting because they're getting 847 versus 500. So to me, that part is like, you can come back on the wage subsidy. I'm not asking you to work because I don't have any work for you. But if they're coming back and you're asking them to work for less money, I'm going to push that to the lawyers and ask the lawyers to deal with whether you can legally do that. I think that's more of a legal question, and I really don't want to tread on.
That's perfectly fine.
That I'm unfamiliar with and give advice on something that I'm not really familiar with.
Okay, that's perfect. From the question tab, somebody just submitted a question asking in regards to the 75% wage subsidy. As a small design agency, we don't have an exact frequency for billing, meaning that sometimes I don't bill my clients for a few months and then I catch up on billing, which means that, sorry, losing my lines here, that specific month, a lot of invoices go out, but it doesn't reflect the work we did that exact month. Can we prove the loss of revenue by showing our billable hour time tracker, which does show a loss of 15% for March?
Good question. They want you to be able, upon audit, to support the reduction of time and the reduction of revenue. And to me, being able to, if you've got timesheets and work in process that supports that the previous year at that time for the month of March, for instance, I had this much billable hours, and then this year I have this much billable hours, and it's so down, so it's going to affect a billing I do later. If that's the way that you feel that you could potentially justify that, and you apply that principle consistently through the 3-month subsidy period. I think it has an adequate basis. What we're finding and what we've asked the government to clarify is a lot of our clients do bill based on completed contract or percentage of completion, or you get a deposit up front and that's what goes into your revenue, and you're not actually properly doing the revenue true up until potentially the end of the year when your accountant gets your books and says, okay, this is deferred revenue, or this is just a deposit and you haven't done any work for it, so we're going to defer it. There's just so many questions about how to manage and understand what is my billing cycle, how does it work, and how do I evaluate 1 year to the next, because you could have had a lot of projects completed last March that were for work done, 6 months prior to that, or for the January-February period. So I honestly believe that if you're not doing something totally fraudulent, which is what they're trying to pin down, and not redoing how you establish sales from one basis to another just to manipulate the results, if you apply a consistent, like your industry is such that you take deposits up front, you do some work and then bill it. So you really want to ensure that what is my revenue? And I think billable hours and hours from the team during that period versus hours from the team in the next, as long as it's not a result of a non-COVID issue. Like, what if you had a huge, so I mean, I think you should use the most reasonable basis and approach that you can to justify, assume that you will be audited and questioned on this, and the penalties are severe.
Yes, yeah, they're 225% of what you're taking out if it's fraudulent.
And 5 years imprisonment.
And jail, yes, that's true.
So I really wouldn't want to be advising on aggressive accounting policies or strategies. Follow consistent.
Not a good idea. Now, still along, like another question on the sidebar. Somebody's asking, if you're incorporated and own a business, but pay yourself a normal payroll, are you eligible for the 75% wage subsidy?
If you were, so basically they've talked about non-arm's length people to your corporation. If you were taking a salary in your corporation between January and March of 2020, which is pre-COVID salary, then you will qualify for post-COVID funding. So you cannot have, and this is where dividends do not count, and they haven't made any changes to that. My understanding, unless something came out today, and I'd appreciate anybody giving me feedback on that, but my understanding is dividends are not used as a basis for the wage subsidy calculation. So if you were on dividends in January and February and you just decided on March 18th to put yourself on salary to get the COVID subsidy, I think that's going to be part of this, like, severe penalties. My understanding is you have to have been on a salary pre-COVID in order to be able to get it. But the answer is non-arm's length owners that were on salary will qualify for the subsidy.
Perfect. All right, moving on to our next question here. If you do work share, how much is the government covering? Does the employee still work 50% and or lose out on some money?
So the work share program is for employees that would have been on EI or could claim EI. So the work share program doesn't work for owner managers and never would have been, and I don't think qualifies it. So, and now my understanding is the work share program is working in conjunction with the subsidy. So if you have a pre-established work share program and you've got that in place where, let's say you've got 50-50. So you've got the employee group that qualified for the work share on a 50% split. So 50% they're working, 50% of their time, 2.5 days, they're working, and 50% of their time they're getting EI subsidy. So that EI is being paid directly to the employee. The other 50% that they're working and you're paying them, my understanding would be qualifying for the subsidy portion of the subsidy. So they're getting the 50% already funded, so the other funding can come from the source, assuming, again, all the other criteria have been met, the reduction in your sales and everything else. But they're trying to work the subsidy and the work share program cohesively, so that you can't get more and you shouldn't get less, but you should balance out. It's the same thing if anybody has actually started the 10% subsidy that they introduced right at the beginning and went into Royal Assent very quickly. If you had been taking that and then you get your 75% subsidy, you've got to reduce your 75% subsidy by the 10% that you've already received. Like, you can't get more than what they're offering. So if you're now entitled to the 75%, you've got to kind of reduce the 10% that you've already claimed.
So 75 is the max, basically.
Mm-hmm.
Cumulative. Okay. A lot of our members are freelancers. So somebody's asking, how does government funding work for those with irregular freelance income on the side? So you might be employed, but you also do freelance on the side. How does that affect your income?
Go back to stage one, the CERB. So the CERB, the regular subsidy for people that have stopped working completely. So you have to look at this on a month-by-month basis in order to qualify. So you have to then say, if you haven't worked for a month, you should be able to collect, the first form of funding that we've talked about. If you have, so you get the CERB. But if you're now working and making some money, you have to declare that and then give the CERB back or not. So I think if it's cyclical and always has been, then you might not. But I think either you have to make the decision not to work during the CERB period or to work. But I think if you're going to work, then you're going to make money, then you should not be collecting the CERB.
Yeah.
It's hard. I know there's some of the businesses stop for a month. Well, maybe you get it for a month, then you can work, but you can't do both. You can't, like what they're saying is your income has totally, think of yourself put yourself as an owner in a position as an employee. If the owner let the employee go, they're not working. So you are not working, so you can collect this. It's like collecting unemployment insurance, and you have certain rules and conditions. And if you actually make money, you're supposed to report it and go off. Right. So I think it's the same type of scenario.
Except now it sounds like you can make up to $1,000 a month. Yes. From today's announcement, apparently.
Right. So that might answer this irregular freelance.
If somebody has $400 a month coming in and is laid off otherwise, they might still qualify based on this announcement.
Based on this announcement, yeah.
Okay. Great.
So I think that might answer that. Today's might have just answered that. I was trying to figure out how to answer that, but now
it'll change again tomorrow.
You can make $1,000 of freelance income and still get the CERB.
Apparently, yeah. All right, going back to the 75%. To qualify for the 75% wage subsidy, do you have to prove revenue is down 30% from just 2019 or multiple years? If so, how many years, and do they base the calculation on the lowest one?
So it is just the previous year. So you cannot, if the previous year was already really low, you can't average it out. But they have given, they realize that a lot of people might be startup or have various things. So they did give you an if or, and you must follow the same principle. So the concept is, if you decide to use the previous year as your comparison, you have to stick with that for the entire 3 months that you are doing your evaluation on. Yeah, another option that they presented just before it went into Royal Assent was you can also look at January and February 2020 billings, divide that by 2, and that gives you your average for those 2 months. That becomes your base to do your analysis going for March, April, and May. So for instance, in the example they gave on CRA's website, if you build 50,000 in one month and 70,000 in the next month, and you have a total billings in January and February of $120,000. You divide that by 2, now you got 60,000 as your monthly base. Now you use that 60,000 to evaluate March. So if you take 60,000 times 15%, you look at 9,000. So if your sales in March are 50,000 instead of 60,000, did they go down by 15%? That's your base. And you look at April, and you've got your base of 60. Now you look, did April go down by more than 30% of 60,000? Then you qualify in April. Now so once you use the January, April, you cannot switch to using previous year comparative. You have to choose that and use that as the base for the entire 3-month period. Or you use your previous year's comparative month. But it doesn't go back multiple years.
Yeah. Now, expanding a little bit on this in a slightly different way, somebody's asking on the side here, if our income has dropped, but I have reserves left in our business account from 2019, and as such can cover expenses, including salaries, for at least another 5 to 6 months. Can we still apply for the 75% wage subsidy, or do we have to use up to 2019 savings first?
You will qualify. You don't have to use up your savings first. My understanding is it's a sales test, sales down from one to the other. It doesn't look at what your retained earnings are.
Yeah.
So what you're trying to do is you have reserves, you have other expenses, right? Obviously, you still, I mean, the wage subsidy supposedly only covers 75%. So if you have people on salary still working, then you're potentially covering their other 25%. You need money for that. You need to pay your rent. You need to pay your telephone costs, your computer costs, all your costs of running your business. That's why we have retained earnings, in case there's a time when we don't, when we have a dry spell in our business. And so the retained earnings is there to cover off, the business expenses, but it's not affecting this. The wage subsidy is there to say, listen, and frankly, as an employer, you're saying, if I don't get the wage subsidy, these people are going on unemployment. I have to lay them off. I'm not getting enough to support their salary. So this is the government saying, yeah, we'll help you support their salary, and your reserves and retained earnings will hopefully keep the other operating expenses paid too for this period.
Yeah, perfect. Earlier you mentioned business owners are eligible if they're salaried employees of their incorporated companies, as long as they're not arm's length. Somebody would like you to define what that means, not arm's length.
So I'm sorry. Arm's length is somebody that you hired that you are not related to, and non-arm's length means you, the owner, are not arm's length with your business because you own the business. So an arm's length person is totally independent. Usually an employee who doesn't have ownership in your business is arm's length. But non-arm's length is somebody who is a relative or you who owns the business, or a shareholder, or various things like that. So under the subsidy program, both parties are entitled to the subsidy as long as they were on. So employees are easy because they're arm's length. So you were paying them on salary and you continue to pay them on salary. The subsidy is easy to determine. It's the owner managers, the people that own the business that are not arm's length to the company, that haven't paid into EI, that haven't done any of that. You have to prove that the salary you're paying yourself was a pre-existing salary, because you can control that, right? So you can control and manipulate. What they also said is you can't hire for new hires. The new hires cannot be non-arm's length people. So for instance, if you decide during COVID to hire your son because he's finished university and doesn't have a job, but he's your son, so you're going to pay him and get the wage subsidy, they've said, no, you can't do that. So new people coming on board that you hire to get the subsidy has to be arm's length. It cannot be non-arm's length. Hopefully that's it.
Next question. If you don't meet the 15% lower revenue for March, Will you be able to apply for April or May if circumstances change and the revenue is down 30% in these months?
Absolutely. This is a month-by-month subsidy. You could qualify 1 month and not qualify the next, and you don't get it. So basically, as you can see, it's going to be backdated because we just went into Royal Cent. Nobody's got their money yet. So it's based on March, and it's for payroll that went from March 18th to April 11th. So we are at April 15th, and we haven't got that period yet. So in fact, once you get that subsidy, you'll have that, and then when we end April in 15 days, you'll have your sales numbers for April, and then you'll do, and your employees' salaries up to whatever May 6th or whatever the date is, and then you'll apply for the subsidy. What they have said is continue to pay your employees as you normally would, and the subsidy will come. So you might have to pay in advance before you get your actual government funding. So for the funding, also remember it's taxable income to the organization. I just want everybody to know that. So the funding's coming in to help offset the labor costs, but it's going in as revenue, and you'll pay tax on that money. So I just want people to understand that it's not free money, it's taxable income. It's like billing a client. But on the other hand, it doesn't, if you get the subsidy into your bank account in April, it doesn't get included in your sales analysis for the month of April. So make sure you don't put that in on your monthly sales report to determine whether you got the percentage. Right. And also the benefit of the subsidy compared to the 10% that they originally came out with, the 10% maxed out at $1,325 per employee for the entire period, up to, and $25,000 per employer. So, you know, if you had only 2 employees, you were only going to get subsidized during the entire period, 10% up to a maximum of like $2,600. This subsidy is much more substantial, and so they're looking at giving it now and auditing it later. And so you will be subject to a lot of scrutiny later on, I'm sure. So I'm saying let's make sure we qualify and we have everything, because the last thing you need to do is like 6, 8 months, 10 months, 2 years down the road, they come in and say, okay, we're now auditing, you know, the funding that you received, and you did this or you did this, and you didn't really qualify. So it's
right.
Yeah.
All right, our next question, I'm not 100% sure how to interpret that, to be honest. Somebody's asking, if you ask your employees to work for 75% of wages, are they only obligated to work 75% of their hours?
Again, I think this is a legal question.
Yeah.
But I would think that if you reduces somebody's wages, then you're reducing their hours. From a legal perspective, I don't know, unless you have some other agreement with your employees and you work something out, that is totally, but from a legal perspective, I don't think you can ask somebody to take a pay cut without correspondingly asking them to reduce their hours. But right. I'm not going to give my legal opinion on that either.
It also seems somewhat logical, like that if you have not enough work, then easily they should also be working less. Like if they should be working 100%, then you should not qualify for the 75% in the first place.
Right. Now, so the subsidy is paid even if your employees are sitting home doing nothing. Remember that. So the government has said, listen, I'm not paying you because I'm not asking you to work. So if you bring these employees on, say, I'm still not asking you to work, so you're just going to get the subsidy because that's all I'm getting. And I'm not asking you to put any billable hours in. So this is not supposed to cost because otherwise the employer would have laid that person off because they have no work for them. So that's the thing, is if your employer says you'll get the 75%, which is the $847, the employer could basically ask them to work either, or they don't have to work at all. Like that, I mean, that's the whole thing, is the government is giving us the 75% of their pre-COVID salary up to a maximum of, and the employer then determines if that person is going to work. But if the person is going to work, then they should have been topped up with the other 25% if they're working full time and the business is still functioning. I think that's maybe what the question is.
Right. On the sidebar, somebody just asked if the subsidy is already available, the 75%.
It went into Royal Assent on Monday, but the applications online as of 15 minutes ago were still, please wait, it's coming. So there's no ability to apply. So they're asking businesses to carry on as usual, assuming that this money will come. So they're asking you to bring your employees back. They're asking you to do all of this. So in good faith, we as employers are doing that. So I'm hoping in good faith the money is on its way and the applications are going to be as easily as, you know, the CERB applications, which were pretty easy.
Yeah. Now, that same person is also asking, if we applied for the 40K bank loan that has to be paid back by end of 2022, before they knew about the eligibility for the wage subsidy, are they still eligible for the wage subsidy? Essentially, are they basically overlapping? You can do both, right?
Do both. You can do both. Yeah. And you know, we haven't talked about, I've got the CERB, the CEBA, and the Qs, I like all the acronyms. But so for the loan portion is you did have to prove greater than $50,000 of T4 salaries on your T4 summary at the end of 2019. Now that is still under dispute and they're trying to get that changed. My understanding, unless somebody can tell me that they said something today, but they hadn't changed that criteria as of yet. They wanted more people to get access to the loans. And again, it came down to, what if I'm an employer that had, you know, some freelancers working for me and I took my salary via dividends because that's how I did my tax planning, and now I'm not entitled to, I don't get the wage subsidy because my sales aren't down, but I'm not entitled to any support to help me pay my rent and various things like that. Is it fair? So they're looking into potentially expanding the loan component of the funding. Okay.
Online, somebody just asked, maybe it's just good to clarify again. Is the required dip in revenue 30% or 15%? Do you want to just explain again which one applies?
The 15, so because the pandemic was kind of starting mid-March, what they're saying is a lot of people weren't affected 100% by like a significant amount in the month of March. So they're giving them a little concession by saying, well, it's probably your sales at the end of March that were more affected than the beginning of the March. So we're going to, the 15% revenue reduction is only for the month of March, because they're basically saying it was a half of a month. But you have to look at the entire month of March this year and the entire month of March in the comparative year 2019, and if the revenue has gone down by 15% or greater, then that is qualifying you for the wage subsidy for that period, which is the period, the payroll period going from March 18th to April 11th. That is the qualification. So it's based on March sales, 50, but then in April, when you're reevaluating, because it's a month-by-month subsidy, the month of April will be 30% because that entire month is affected by COVID.
Perfect. I think that's hopefully very clear. Looking a little bit more into the future, past these next couple of months, are there any government benefits or subsidies that account for the slowdown of upcoming work versus current projects?
So I can understand, like, a lot of us have projects on the go that we're finishing. So we're not totally affected right now by being able to prove a 30% reduction. And that program only goes till June, although I don't know if there's a caveat in the document that says they'll look at it on a month-by-month basis if this lockdown or if this severely affects our businesses going past June 6th. So we'll have to wait to see if the wage subsidy carries on past that. But a lot of us are saying, you know, well, I've got a couple projects on the go and my things are pretty set until June. So now the wage subsidy's gone. What do I do? The CEBA loan, if you're not entitled to it, you may not have been entitled to it already. Because to me, my guess is if you can get it and you don't need it today, get it. Like a bird in the hand, right? So if you qualify, but you think, oh, I don't need the money, at least fill out the application and get it going. But that said, I just heard through the grapevine from an associate that a company applied for it and they were rejected because they had too much money in their bank account. But the money in their bank account was to use to fund the payroll and the various other things, but for some reason their application got rejected. So that's the first rollout I've heard of this, and so I'm waiting to hear more from other people that have applied to see how long it's been. But based on the applications that went out last week, I haven't heard anybody having received the funding yet, the $40,000 loan. But if you're waiting to apply for the loan because you're still working and things are going on, but you might wait, I would recommend, why don't you get the application going? So because you're anticipating, oh, I haven't got any contracts for the month of May. Well, pre-anticipate how you can do that. You know, this is probably the most important time for us to sit down and do our budget and understand our income statement and understand the expenses we have and where we can kind of start cutting if we want to keep our wages. Can we cut back on some of these other non-essentials? Like how can we deal with, you know, every single line item on our expense report? So another thing is, you know, manage your costs, manage your budgets, and know where you can cut. That's not going to severely affect the organization from doing what you have to do. Asking your landlord, you know, I don't know, I've had a few clients ask already. Some of the landlords have been amazing and to reduce or defer their rent payments, but also remember the landlords have the mortgage and they have to pay that. So you've got lots of issues there. Another option is, you know, like sometimes we use credit cards to build up debt, and credit card debt is still at, I don't know, 18%, 20%. It's a very expensive way of financing our business. And maybe you need to, especially if cash flow is okay right now, make sure you secure a line of credit for your business because the interest rates will be a lot lower. Look at that versus maxing out your credit card. So see if you can get, even if that line of credit is secured by your house or secured by something, I understand that. So it's a home equity line of credit or something, the interest rates will be so much lower than credit cards. And so anyway, maybe look at that to also help after this. If things completely stop, obviously you can still apply for the CERB, right? So if all of a sudden your business stops, so you have 3 contracts on the go and then you don't see anything coming down the pipes in June, well, that's when you have to apply for CERB. And the CERB, my understanding, is going until October. And so that program is available for, you know, the people that can't collect DI right through till October. So you might not collect now because you're still making more than $1,000 a month, but in 2 months from now you might qualify, and then that's when you've got to go on.
Right. Somebody actually asked online, as an employee, if I anticipate being laid off next week, should I apply for CERB now or wait until next week to apply?
My understanding is CERB's coming in very quickly. I don't know if you have, what happens if you anticipate and it didn't happen, because now your employer is going to get the wage subsidy. Now you've applied for it and you're going to be kept on. So I think I'd be very confident with your employer that they're laying you off and that you are not going to have a job next week before you actually apply.
Yeah. Back to the freelancers. What is the best financial strategy during COVID and post-COVID?
Okay, I might have just kind of covered that.
That was covered. Okay, I kind of did talk about some of
Talk
it
about
already.
the various things for you to do and get yourself lined up for all of that.
Perfect. And I think the next one is sort of answer to, for those who are still working, what are your financial recommendations during this time period, saving versus investing, other?
So I'm not going to give any investing advice at this point because I have no idea what the market's going to do. You know, your brokers are probably calling you saying, you got to buy, you got to buy. I have no idea and I'm not going there. So I'll leave that to you to talk to them. But obviously, hunkering down, deferring mortgages, deferring rent, managing your cash flow, doing whatever you can during this period of time when everything is such an unknown. You don't know if you've got business tomorrow. You don't know if you're going to be in the same boat 6 months from now. I think we all have to kind of look at this as a, you know, unfortunately, we have to weather the storm now. And then what happens? What's it look like? And how do we pick up the pieces afterwards? So again, just trying. If your preference is to invest and go into the markets, that's up to you. I think you have to kind of look at something as the Prime Minister says, this isn't going to stop in the very short future, and we have to really be prepared for you know, kind of a period of, I don't know, whatever they're saying, 6 months to 2 years. So plan your life accordingly and plan how you're going to use your resources that you have in order to best, you know, last for that period.
Yeah.
I wish I had a crystal ball.
Well, I have another crystal ball question. I think it kind of expands on this past one. Would it make sense to tap into the incentives now, even though our business should be fine for at least 6 months? You sort of answered some of that already. And is there any expectation to receive any assistance later this year? That's the crystal ball question.
Yeah. So I think that if you are eligible for any of these, due to this uncertain world, you should tap into that if you can get it. The loan is interest free. If you have payroll greater than 50,000 and under $1 million, you want to apply for that loan. It will help, and the forgivable portion, even if you can pay it back in December, 10,000 is supposedly forgiven, even though it's taxable income to you. It still helps you for the next 2 years. I would tap into that immediately if you can, and if you qualify. If you can qualify for the wage subsidy, if somebody's going to help you through this and you're keeping people employed, absolutely. Why would you not? Yes, but your revenue has to be down. You have to qualify. And I don't recommend anybody doing anything that they're not supposed to in order to make it so they qualify. But if you do qualify, yes, definitely, that's what it's there for. And I know on a bigger basis, you might say, well, it should be used for the people that need it the most. And I agree as well. Like, I don't think people that aren't entitled to it should get it. But I also think that in this uncertain world, we don't even know if we're going to need it. And we can't tell right now if the wage subsidy is going to be expanded past June the 6th. So if you qualify right now, it's going to give you at least some resources to help you keep those people on payroll till July or August. If you can fund that now and have some money coming in to help fund it after that, I think it's really important for you to kind of take what you can get when you can get it.
Yeah. Back to the CERB quickly. Somebody online was asking, do we have to pay back the CERB or a portion thereof, and is there a max amount?
The CERB has to be paid back if you work and make more than $1,000. I guess, yes, you do. Some people have been double paid the CERB, I understand, because they applied for EI and then they didn't realize they were entitled to CERB, so then they got their EI, and then they got their CERB, and it got double dipped, and they're asking people, they're going to catch you. They've actually announced on the yesterday, they said, you know, those people that actually got paid twice, please come clean, because we will figure it out. We've got your SIN number, and eventually once we get our people in place, we'll figure out that we double paid you. But it's nice if you actually got it twice. You should ensure that that you do pay it back. So the repayment is basically if you made more. It's the same with employment insurance, right? If you're on it and then you report that you've made more money, then it is. Will you have to pay it back at the end of the year? That is left to be seen. So here's the thing. At the end of the year, you get a T4 for $100,000, and you've got some CERB for $24,000, let's say. Well, not 24,000 because it hasn't gone for 12 months, but let's say 15,000 of CERB. Are they going to look at your T4 and see that you've made all this money and you were over a certain limit, and then they're going to claw it back? I don't know. They do that with EI for people that are on EI, and they claw it back for some reason. Or so I don't know. They haven't said that there's going to be a clawback at the end. So I cannot tell you whether you will have to repay any of your of the assistance that they provide to you. Right now, they have said not. But if they found out that you were double dipping during that period of time, but if you weren't double dipping, you made it before and you made it after you went off, how can they ask you to pay it back? It helped you out through that storm. So right now, we don't know. The other thing I'd like to just maybe remind everybody is the CERB is coming in tax-free into your hands, but it's not tax-free. So you're getting the full $500 a week. Now that is going to be on a T4 slip of some sort, T4E or some sort from the government at the end of the year, which will show total income received, deductions, 0. So you need to know that when you file your taxes next April, there will be a tax liability on that money. Now, if you only made $15,000 in the whole year, the tax liability is nominal, if anything. But if you had a T4 from January to March, and then you're on CERB till October, and then you start working again and you have that. So let's say you have T4 income over $50,000. Well, there's going to be a good 35% tax owing on that money. So you have to be prepared for the tax implications. If you make over $100,000, it's possible that it's going to be 40 or 45% tax owing on that, because that money will float to the top of whatever money has had deductions taken. So be very prepared to be owing tax next year on the money. It's not free. You don't have to pay tax on this money.
Perfect. Expanding a little bit on the EI CERB correlation, somebody asked online, for those who have been laid off and have applied for EI, are they also eligible for the 2000 relief, which you kind of answered? I've heard if you apply for EI, the government will automatically qualify you for this at the same time. Is that how the double payments happened so far?
The double payments happened. What we need to say is, here's what happens. You applied for EI because you didn't know they were bringing out the CERB. But all of a sudden, the government has said, everybody's going to go on CERB first. The best part about that is people that were entitled to EI can then do not lose any of their insurable hours to collect EI after the CERB runs out. Whereas, so it is in your best interest to take the CERB first because it doesn't eat up your EI qualifications. So take the CERB, I think you have to anyway, and then you've saved your EI insurable hours for afterwards. So if you still don't have a job or still don't have work, then your EI kicks in after October 6th when they stop the CERB program. So what they're saying is it is probably better if you collect the CERB first and then your EI after. So I think that's what they're encouraging people to do, and I think they've automatically defaulted it. So that what the issue is, the people that actually applied for EI on March 15th, and then the program rolled out after that, they got an EI check and then they got a CERB check, so they got double and they're saying, well, you weren't really entitled to double. And some people also applied for EI, and then when CERB came out, they logged on and applied again automatically, thinking, oh, I better apply. So they double applied, and it didn't get, they didn't synchronize it.
Yeah. Excellent. There's one question that's more geared at students. Some student here wrote that he had a summer job lined up starting in May, but now the employer told him their business is non-essential and they won't be able to offer the job. Makes sense. This was important because obviously that money was supposed to pay for school in September. What subsidy are students eligible for and able to get? And especially if they do find another job, say 3 months from now, how does that impact them?
They haven't addressed students in any depth at this point, unless they came out today with that. The problem, and they've promised to address this, and they've asked a lot of things, giving people more OSAP, that kind of stuff. If you had a summer job last year that gave you in the last 12 months more than $5,000, then you should be eligible for CERB, right? Because you have to have had employment income of greater than $5,000. So if you did work last summer and you did have $5,000, then I suggest you apply for CERB, because you can't get your summer job. If it was under the $5,000, they're still working on how to help these kids. And right now, I don't have an answer for you yet. Hopefully,
okay. Hopefully more coming out soon.
Yeah.
All right, then we're getting close to the end, so let's have time for one more question here. Somebody wrote, will business owners qualify for CWS? In addition to CWS, what can companies do to manage cash flow?
I think I've kind of dealt with managing cash flow, like trying to,
cash flow.
And if you qualify, will business owners qualify? Well, you will qualify if, again, the sales are down and you had, it's based on payroll. So if the business owner was not on payroll pre-COVID, then in all likelihood, the CEWS isn't going to qualify. That was one of the worst parts that the Canadian Tax Foundation and the CPA Ontario went both to the government and said, you're not dealing with our business owners that are on dividends or whatever, so that they're not, or self-employed individuals that their income comes from a flow through of just whatever the net profit is on, and it's not like a T4 income. So they haven't dealt with those, other than the fact that if your business has completely stopped, you get the CERB. If it hasn't completely stopped, but you're not on salary, that's where there's a big hole of people that aren't qualifying for any of the programs. And that's where we're, as much as we've been lobbying to have all this group of people dealt with, that in the stuff that went through Royal Assent, they still left out a big group of people. And I think that would be the owner manager group of people that were not on payroll. And at this point, I don't have any insights other than managing your cash flow, trying to negotiate with your vendors, negotiate with your landlord. You may have to lay off your employees. And I just wish I had more advice.
Well, you had a lot for us today. So thank you very much for answering all our questions today. This actually brings us right to 1 o'clock. That's the end of our session today. There was a lot of great insights, and we really appreciate you spending the time with us today. So thank you, Leanne.
Thank you.
Just before signing off, a quick reminder that RGD organizes regular free virtual events for our members. The next one is actually already tomorrow, April 16th, and Dr. Nadine Chehine will present a webinar on power and politics in Arabic type design. And then the following week, on April 23rd, we have our skill sharing webinar with Starla Benson, RGD, and Magwit Hannah, RGD. You can always visit rgd.ca/webinars for a full list of the upcoming webinars. This concludes today's webinar, and thanks for your participation. And thanks again, Leanne. It was very helpful.
Thank you.
Okay, bye.
Bye.